Tesla cut the prices in a different stories that we're tracking here. Tesla cut the prices of its Model 3 and Model Y cars in China by over 10% after deliveries of its China-made vehicles plunged in December. This is the EV maker's second time in less than 3 months that it's slashing prices. Now, a few things have taken place within that time frame. Number one is the production, and of course we got some of those production and delivery numbers. I think Tesla is really just looking for people to take delivery. That's one issue. But then additionally, it's a number of the credits that are going to continue to be rolled out too, and the extension of some of those credits, that makes financing even more possible for some people. So now that you've got another cut on top of the credits, on top of just trying to get people to take delivery, that's spelling out some serious issues that investors might be paying close attention to here on the day, which is why shares are moving lower.
Maybe Paul Meeks was onto something. Tesla hitting $29 a share. He came on, obviously we're not making a stock call here, but look, now the problem here with this is this reaction in the market to Tesla, pre-market, has nothing to do with what Elon Musk is doing on Twitter. This is purely fundamentals as it pertains to Tesla, them cutting prices, probably putting their margins at risk in a key market like at China. We're also seeing pressure on a NIO and an Xpeng, those Tesla China rivals. And I would be more concerned about this market reaction than necessarily whatever is happening over there at Twitter, at least for right now, because that's what the stock's trading off of.
I mean, it might have nothing to do with Twitter. It might have to do with the short interest in the stock, which has been climbing, right? That is something that could potentially be exacerbating this, that there is definitely a financial interest on the part of some investors for the stock to continue to go down. That said, obviously, there's also the fundamental case of what's going on here for the company now cutting prices for the second time on these China vehicles in what is a really substantial market. By the way, they also cut prices in Japan by 10%, so that's something to consider too. It's not just in China. And one more point here that my pal Tom Hearden made over on Twitter is that the man who oversaw China and still oversees China, by the way, his purview was just extended. That's Tom Zhu, who just got a promotion, is now overseeing North America as well after what we're seeing in China. It's kind of an interesting choice here to expand that person's role.
Just lastly, and add on to this too, at some of the price ranges that we're talking about here, and it being down from the $38,000 figure that we had seen previously for the Model 3, $42,000 used to be that marker where if you saw the average selling prices dip below that, Tesla was actually taking a loss on every single vehicle. And so now this is a profit margin story as well. And any hit to the free cash flow for a company like Tesla too, going into a recession where there is fear around some of the car sales and moving through some of the produced vehicles, I think investors trying to get ahead of that.
And there's no stock buyback.
I mean,
there's no
I
stock
think
buyback
that is a TBD because I think Musk has said that their operating efficiencies have improved on the vehicles, but I don't know to what extent. But so that to me is something we still need some more information on.
Sure.